Happy New Year's Eve Day, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the first trading week of 2023. And we're going to try to figure out, has the Grinch stolen the Santa Claus rally? So thank you all for joining us for the live stream. Thank you for watching our video. Part one of our weekly trading game plan. We'll do our market analysis, look at our strategies, see how the markets performed last week, and derive our strategies for the first trading week of 2023. And again, try to determine, has the Grinch stolen the Santa Claus rally for 2022, or can we still get a Santa Claus rally this first week of trading in 2023? So again, welcome to everyone that's joining us in the live stream. Again, happy New Year's Eve day. Nug M, DS Greg, again, thank you all for joining us. Hope you had a very successful trading 2022, and let's prepare for an even more successful trading year in 2023, and we can work together and help each other out, succeed in our trading for 2023. So here's our Google document with our notes for part one of our weekly trading game plan for this week. Again, you can find a link to this Google document. These are publicly accessible in the description box below. Also to the Google Drive folder where we store our weekly trading game plan notes. Our notes have links to bonus videos, all the tools, etc. that we use in our weekly trading game plan. So again, you can find these links and refer back to these in the link in the description box below. Welcome also Tony Roses, Flip of the Shippa. Happy New Year's Eve day to you as well. So again, we're going to try to look and see, has the Grinch stolen the Santa Claus rally for 2022? We recently released a video that explains what is the Santa Claus rally, what's the time frame historically that we would expect a Santa Claus rally, and all the historical statistical probabilities of having a Santa Claus rally, etc., even in a bear market. So if you haven't already seen that video, you can reference it via the link here or on our BeachBum Trading channel. And again, I'd recommend you view that video so you understand, the Santa Claus rally. What does that mean? When does it occur? The net effect that we're looking at is we saw the last week was kind of choppy, pretty much a down week. But the Santa Claus rally also includes the first trading days of the next year. So that would be next Tuesday and Wednesday, because just as a reminder, the markets are closed on Monday in observance of New Year's. So again, we've got an opportunity still for a Santa Claus rally. And again, we'll take a look and see if we think that we might get one still. Again, we still have that opportunity where maybe the Grinch hasn't quite stolen it for this year or not. Also, we'll be starting to talk about the January effect, and we're producing a video. It's under construction. It's currently unlisted, but as a bonus for watching this weekly trading game plan, you can access that video now via this link. Again, the description, etc., is not quite completed yet. We'll be releasing that and talking about the January effect and what that means for trading in January going forward. Also, we recently released a video on what the wash sale rule is, and this is going to be important for trades that you're making for anything that you took a tax loss harvest on last year. You need to be aware of the details of how the wash sale rule works, so you don't inadvertently violate that wash sale rule and invalidate your tax harvesting from last year. So again, you can access that video via the link below or in our notes here. And also yesterday we released a video reviewing our New Year's trading resolutions from last year and setting our New Year's trading resolutions for this year. And we're inviting and encouraging all of you to share and discuss your New Year's trading resolutions for your benefit and for everyone else's benefit. We have a topic in our trading psychology channel in our Discord where we can discuss this. And I've also already posted our resolutions in our Facebook group, and we can discuss them there as well. But again, you can find this topic in our Discord. Our Discord is free to join. You can find an invite in the description box below. And again, our Discord's free to join. And here's the topic to discuss and share your New Year's trading resolutions. Again, help get support, get help in achieving your New Year's trading resolutions from the rest of our BeachBum trading community. So again, I'd encourage you to share those. I will be posting a link to our document that contains all of our resolutions there as soon as I am able. But I'd like to see what your resolutions are and how we can help you succeed in achieving those resolutions as well. So welcome also Walter Lyons, Alan Krentz. Thank you for joining us. So now we'll dig into the market analysis, see if the Grinch stole our Santa Claus Rally for 2022. Welcome to Ricky Khan. Glad to see everyone. I'll throw out the banner pointing to our Discord invite in there. And we'll jump over to the homepage of FinViz and we'll look at how the markets ended up on Friday. So we can see, there's pretty much a down day again on Friday. On Thursday, we had a little bit of an attempt at a rally. And then Friday, I think there was last minute tax loss harvesting. It seemed like this year, since it was a bear market, a down market, we had tax loss harvesting going all the way into the end of the year to some degree. People probably, taking those last minute tax losses before the end of the year. And then towards the end of the day, about 2:30, 3 o'clock, we saw all the markets started a rally. So maybe that's the start of our Santa Claus rally into 2023. So again, we saw many more decliners, 56% decliners, more new lows, 70% new lows. We've still got over 60% below our 50-day moving average, and we have a vast majority, 70% below a 200-day moving average. And this is showing it ended on a bullish signal, but again, most of the day was very bearish. You saw Tesla was kind of bucking the market after declining for like 7 or 8 days straight. Towards the end of the week, so see some of the other FANGs look like they recovered. So see some of the news. Stocks got wrecked in 2022. What'll drive the market 23? Again, that's what we'll be looking for and we'll be discussing and strategizing is how can we make money in trading, succeed in trading in 2023. They say it's the worst year since 2008. That may be in terms of indices, etc. Hopefully it was not the worst year for you. It was not a bad year for us. So again, that's our philosophy and what we try to communicate is there's ways to make money in any market, bear market, bull market, choppy market, range bound market, and that's what we're here to help you realize and figure out how to make money in any market. Saw oil kind of made a run yesterday back up to 80 after having bounced off at 80 once before. We'll see that again. The futures and natural gas has been on a pretty much steady decline recently. And we'll talk about our strategy with playing natural gas. Gold's been running up. It's been consolidating over 1800. We'll also see silver has likewise been consolidating over 24. We saw again the treasuries pushing up. We've been talking and expecting the treasury yields to be pushing up towards the Fed interest rate of 4+%, and so we saw that start. And the dollar's been weakening a little bit recently, so that also gives a little bit of a push, some momentum to the dollar-denominated commodities. So now we'll look at each of the indices as well. Okay, we'll look at the SPY. So again, we see, it ran up, tested that resistance, and got rejected, bounced down, broke back down through its 50-day or its 20-day and its 50-day moving average. So pretty bearish signals on that. Again, that's that level at 400, 410-ish is acting as pretty stiff resistance. We zoom out to the weekly. Again, we see it's getting rejected off the 50 period, the 50-week moving average, broken down below the 20. So, and it's still above its 200. So again, pretty bearish signals. It looks like it's, potentially headed down to test that moving average and or make a new low. Look at the Qs, the NASDAQ. Again, pretty bearish looking. It's below its moving averages. Looks like it tested the 200-week moving average, got a hammer, so it did recover, but so it's a somewhat of a bullish bar at the end of the week. So maybe we'll get our Santa Claus rally, but again, the trend is definitely down. Bearish market. So again, our trading strategy should be focused on how to trade a bear market. We'll talk about that in the strategy section at the end of this live stream, at the end of this video. Yeah, we've been talking about this pretty much all year, how to trade a bear market. There's, again, plenty of ways to make money in this market as well. Dow was more bullish. We see it broke up over its moving average, over its 50-period moving average, and now that's acting as support. So again, more bullish on the Dow. It's got some decent support from that moving average. So it has the potential now to break up into a more of a bull type market. So again, you might want to be looking at more Dow type stocks, Dow type industries. IWM, the Russell, and more small caps, again, pretty bearish, got rejected off the 50-week moving average, got rejected pretty severely, went down and tested the 200, kind of a doji hammer towards the end. So again, although it's pretty lateral, it's flatter than the SPY and the NASDAQ is. So we'll see. There is a tendency, as you'll hear in both the Santa Claus rally and also when we talk about the January effect and kind of the rotation going into a new year from underperformers to overperformers. There is some possibility that we might see some runs in small cap, mid cap. So it's something we'll talk about and be watching for. Is if that starts to happen, we want to be ready to take advantage of that trend. Welcome, Douglas PC. Glad to see you as well. Happy New Year's Eve day to you. Look at the VIX. The VIX got a little bit elevated. Still, it spiked up to 25 earlier on the PCE and the Fed interest rate data, except the GDP data, but it didn't really, we didn't get a real panic, and now it's just kind of slowly retracing, slowly reverting, but still elevated, still sitting in the low 20s. You see what it is right now. Right now it says it's 2167, so a little elevated, but slowly retracing down towards 20. We'll see how long it takes to revert back down to the previous levels of around 20-ish. So let's look at the groups, the sectors and industries. Again, we've been talking about the sector rotations, ways to make money, take advantage of the opportunities in the sector rotations that's been going on. So we saw energy on Friday, recovered, rotated back in energy after it had been a lot of profit taking in energy. Energy was pretty much the best performing sector last year. So for quite a while, several weeks to months, we've seen profit taking in energy, and now they're pouring money back into energy, taking money out of utilities, basic materials, which again had been outperforming. So again, we see that rotation, out of from the bottom performer into to now be the top performer back into energy. Again, consumer defensives was the outperformer, and that's a sector you would expect to outperform in high inflation, recessionary industry. Consumer cyclical technology communication services have been underperforming for the month, and again, they're less conducive to a high inflation, recessionary, high interest rate environment. So a longer term tendency, we would continue to expect that to hold. Basic materials, energy should do well going forward, again, as a longer term theme. So. But again, we keep seeing these rotations from the underperformer, and then they start pouring money into that. It becomes the outperformer, and then they rotate again. So every day, it's worth looking at this and seeing, where's the opportunity and where's the money flowing. So we see luxuries did well. They should do well. It's a different market, somewhat recession proof. See oil and gas, energy, uranium. The day before they ran up aluminum, I saw hit the top of the list, and that had been beaten down. So now we see aluminum back at the bottom. So again, this is this rotation. So the day before aluminum was near the top, now it's near the bottom. Silver had been outperforming, now it's near the bottom. So again, potential opportunities, they'll run these back up. Copper, again, China reopening, etc. That's tends to be bullish for copper and basic materials. So there on the week, we see aluminum's near the top. So on Friday, they profit took in aluminum, pushed it back down. So energy, oil and natural gas. Coal's at the bottom. Again, that's when they rotate in and out of quite frequently. Solar, same way. It's at the top, then it's at the bottom. So again, plenty of opportunities if you're a nimble short-term trader. When you see these rotations start to occur, there's ways to take advantage and make money on those. And we've been talking about this now for a long time and giving you a number of tools to be able to take advantage of these types of sector rotations. So again, just a quick reminder, none of this is financial advice. We're not financial advisors. This is all for education and hopefully some entertainment purposes only. So we've looked at the sectors, the groups, etc. We'll talk about there wasn't a whole lot of economics data the past week. We'll talk about a little bit of it, and then we'll look at what's coming out next week. So I'll get the investing.com calendar opening up for us. Again, markets were closed on Monday, so we did see an increase, as we will again next week. When you have these holiday weekends, these 3-day weekends, we would expect increased volatility when we come back on Tuesday. So again, if you're a short-term momentum day trader, there may be opportunities to trade a pop in the VIX using like UVXY on Tuesday morning. Again, tend to see just a little pop in volatility on the day after a 3-day holiday weekend. So Thursday, we did get some notable economic data, and the markets weren't terribly happy about it. The jobless claims data was just a little bit more continuing. It's just a little bit more than expected. So that was somewhat positive. Initial was pretty in line. So again, the job market's still resilient. And then we saw bond yields start to go up because, again, all of these say that the Fed can be more hawkish, raise interest rates aggressively without worrying about the job market collapsing. A couple other interesting points is crude oil inventories actually went up a little bit, even though they expected a decline. And initially, oil prices fell on that. But then you saw it popped up. There's some Russia news, etc., that popped oil back up to 80. Also, we saw a severe drawdown in natural gas storage, which, again, that was interesting. We'll talk about how we're playing that. And despite that big drawdown in natural gas, the price continued to decline. There was a very short period where it started to look like it was going to pop on that storage news, and then it continued to decline. So again, there wasn't a whole lot of news. We'll look at next week. Again, reminder, markets are closed on Monday, so you get a nice 3-day weekend. We'll talk about some ways that you can take advantage of the 3-day weekend in addition to enjoying the holiday with your family, etc., and relaxing, recharging, and getting ready to make money in the new year. So see if I missed anything. Let me zoom this in, make it a little bit bigger. See if I missed anything important. So housing, again, housing's real estate. Housing particulars still in a recession. So housing starts were very negative. Wholesale inventories were up a little bit. That's not great. Pending home sales, so you see pending home sales down 4%, expected only 0.8%. So again, housing market's in a pretty severe recession due to high mortgage rates. So there's the jobless claims data. We covered that. Baker Hughes. Okay, so we actually had a slight decrease in oil rig count. So oil was going down. So you see some of the oil producers are pulling back just a little bit. So that's holding oil prices up. See what we've got next week. So on the 3rd, we've got some manufacturing PMI data. So there's some inflation data, some construction spending. So again, inflation and recessionary indicators. Got mortgage rates. Got some ISM again. Whether, where are we in terms of headed into a recession? And we get jobless claims data again, non-farm payroll. So again, if this is higher than expected, higher jobless claims, that's actually a positive in terms of the Fed raising interest rates. If it comes in light or doesn't change much, then again, that says the Fed needs to continue to be hawkish to bring inflation down, and they can do that. We'll see oil and natural gas inventories. And then Friday, we get some real jobs, important jobs data too, payrolls, hourly earnings. And again, that will tell us, where are we with this wage price spiral, unemployment data. So Friday of this week, on the 6th, we get unemployment data. And again, that may significantly impact the market. And ISM data as well. So again, Friday is a day to watch for increased volatility, some potential indication of Fed interest rates. So again, if it's worse than expected, that may cause the market to go down, make increased volatility, etc. So see you guys talking about all kinds of poultry, the avian flu impacts, chickens, turkeys, etc. So we'll look at the earnings calendar as well here. I don't think there's a whole lot. Yeah, it's pretty light earnings. It should be wrapping up, and then we'll be ramping into a new earnings season and not too long. So, and there's a lot of people watching the next earnings season to see, if it's worse than expected or negative. It might be a good indicator of if we're headed into a recession, and if so, how deep of a recession. If earnings start coming in bad in the next earnings season. So that'll be for fourth quarter 2022. They'll be reporting earnings starting later in January for, again, fourth quarter 2022. So again, the next FOMC meeting is not until the end of January, so we're not going to get another interest rate hike. So there'll just be speculation based on all this data as to, is the Fed going to go 50 basis points? Or they're going to need to go 75? I think the probability spectrum is anywhere from 25 to 75 right now, and I think the consensus probability right now is probably around 50. And we'll have to see what the data indicates. And again, the markets are going to move up and down based on each of these data points, trying to speculate whether the Fed's going to go, 25, 50, or 75 basis points. Okay, let me grab a drink a sec, and we'll look at the markets tab in Webull, and I'll see if there's any questions in the chat I need to address. Okay, just a quick reminder, and we'll jump over to the online browser version of Webull. Again, Webull's our favorite trading platform. As you can see, we use it for market analysis, due diligence, the majority of our trading. If you're not already using Webull, we would recommend it. You can get up to 12 free stocks, each valued from $3,000 to $3,000 by opening and funding an account Webull. They also offer options trading, crypto trading, etc. And one of my favorites is the 4 a.m. to 8 p.m. Trading hours. As you'll hear and see, there's some opportunities with gap ups, gap downs, etc. at 4 a.m. That we take advantage of or try to. And if you just open an account, you get 2 free shares. And if you fund it with any amount, even a penny, you can get up to 10 more free shares. And again, they're valued from $3,000 to $3,000. So again, if you're not already using Webull, might as well try it out. Get your 12 free stocks. Again, you can always cash them out whenever you want if you don't want to use the platform. But again, it's our favorite trading platform for the full gambit of our trading activities. So again, this is the online browser version of Webull. This is the market screen. I like to look at, a variety of the features of this market screen, one of which is the distribution of advancers and decliners. We can kind of see where the distribution is. You can see there was many more decliners in a very small percentage than advancers, small tail going out with a higher percentage of advancers. So we see the NASDAQ is still outperforming the NYSE, even though, the inflow is pretty negative throughout the day. So towards the end of the day, even though the markets kind of popped up a little bit, the NASDAQ had an outflow of money. So another place you can see the earnings calendar is in this market screen. You just hit calendar earnings. You can also see dividends and splits. So you can see what's coming up before market open, after market close, so very near term. And, if there's anything that's going to impact your trading, sympathy plays, etc. Now we'll look at the best performing industries for the week. So we see uranium, that's some kind of volatility. So energy, oil, natural gas, again, they've been rotating in and out of energy. Or out of uranium. We've been looking for opportunities in uranium. In fact, UROY is one that we've had in our bullpen, waiting for an opportunity with UROY. So you see it popped up a little bit. Finance isn't doing great. It's been pretty mediocre. Aerospace and defense, a little. Well, they did pass their stopgap spending, government spending bill, and it's got quite a bit of money for aerospace and defense, including more support for Ukraine. Retail didn't do too bad so far. We'll see how they did coming out of their Christmas season. They need to, make their profit during the Christmas season. If not, that could be pretty negative for retail. Software's kind of mixed. Household goods, kind of consumer defensive, not too bad. Again, energy, oil, natural gas, pretty positive. Look at ETFs, see the direction of the markets. So down on the Dow. Ultra short small caps. So they were shorting and bear. So down on the S&P, down on small caps. This is all of Friday. Euro up. Small cap bears. So again, they were betting down, short on the Russell. So even though we saw the major indices pop up, they were betting short on the Russell on Friday. We'll see if we get a recovery. Bear on the S&P. Again, uranium, energy was positive. The utilities, cycling out of utilities, cycling out of industrials. Healthcare, energy was positive. Basic materials was negative, although, again, that's another one they rotate in and out of. So we might see a rotation back into basic materials. They tried to run technology, I think, on Thursday, and then it was very negative. So, again, they keep trying to run technology, and then the profit take and pull the money out. It's not something long-term that we're terribly interested in, given a high inflation, high interest rate, recessionary environment. Same thing with consumer cyclicals. The environment's not very positive for that. Real estate, again, very negative. It's been really beaten down. Again, we'll talk about at some point, we'll talk about some potential future opportunities we might want to look at in that whole sector. Commodities, grains, positive. Carbon, we've seen carbon's been positive for a while. Livestock's positive. Brent oil, again, we saw a little bit of a push up in oil. Livestock, oil. Total return. See if we see some bonds. Okay, so shorter term bonds. Japan, yen. Japanese, yep. So, and then we got all the news about China reopening. So that was positive for a little while. And then we hear about, spread of the pandemic concerns. So it's kind of a balance. Okay, so now let's look at the futures as well, and then we'll talk about strategies. How can we make money trading in this environment? So again, we see pretty much all the major indices pretty much rolled over, consolidating a little bit, pretty much on the downward trend. So the Nikkei, the Japanese market, got hit really hard when they did their change in their bond policy. European market's pretty consolidating, pretty flat. DAX, Germany, pretty flat. Again, we see this decline in the VIX, spiked up on that GDP data, and now it's slowly retracing. So again, we see oil kind of, got down to the 70 mark, bounced back up. Now it's hitting that 80 mark. We'll see if it breaks through 80 or if it bounces back down to that 70, 75 range. You can see 75 to 80 is a range, 70 to 80 is a range. And it's been just kind of bouncing back and forth for quite a while. And there's, again, opportunities in that area. And we'll probably talk in more detail about those going forward. But again, we're waiting for it to come back down to either 75 or 70 to look for a potential long position for a dividend paying long position in oil. So again, we see that steep decline in natural gas. So it broke down below its previous low. Now I did want to pop this open while I'm here. So I'm going to open the natural gas chart. We'll talk in more detail, but essentially the net of it is tomorrow, if you come back for part 2, again, we'll look at this in more detail. But we went long boil on Thursday when it broke the previous low. So again, if I look at zoom out the natural gas chart, you can again right click on any of these charts and then open it in a new tab and look at in detail. So the previous low from October for natural gas was like 475. So when it broke down to 475, I started looking at a potential bounce. You'd see last time it bounced off of that. Also, the other thing to note is the previous low of last year was the end of December. So again, another reason I went long on natural gas using boil on Thursday was that I expected it to bottom at the end of the year, and then we saw even before the Russia-Ukraine issues, it started to go up again. So if we zoom this out even farther, we'll see the tendency seems to be towards the end of the year is where it bottomed. Here it bottomed in, looks like June or so. So again, another way to gauge, when you're looking for a bottom, you can zoom these charts out, see where the levels are, the previous bottoms, previous supports, etc. Take into account any, global events going on, etc. Again, we saw that significant drawdown in natural gas inventory. So that, along with the fact that it last year it bottomed in December, was my thesis for why we went long in oil. We still have a longer term position in cold, expecting it to decline, over the longer term. This oil trade is going to be a very, short-term scalp. Whenever it just pops up, I'll take my profit and then and trail it with a stop. If it continues to run up, that's fine. It'll become kind of a pairs trade. So we see gold has been, steadily increasing, consolidating. It's got good support over 1800 now. We'll see how long that trends up. Eventually, we have positions in gold and silver that we've been collecting nice dividends on, in GLDI and SLVO. When these eventually top out and those positions become profitable again, we'll probably sell those and then buy back in after it cycles back down. Again, we've been watching palladium. It bounced back up. See all the livestock. You guys were talking about livestock was generally running up. And then we see the treasuries. So again, the yields went up, so the prices came down. We were kind of talking about that last week. We kind of expected that. The yields still need to go up a little bit over 4, to compensate for the Fed interest rate hike. So again, unless we get a risk off where people pour money into bonds, that tends to buoy the bond prices up, pushes the yields down. But otherwise, we still expect the yields need to come up a little bit to compensate for the Fed interest rate. Again, we see the dollar's been just very slowly declining, and the other currencies now, Euro's 107, and the British pound recovered from their policy issues, and now it's at 121, and the yen has responded to their change in bond policy, so it's been running up. So again, all those push the DXY, which is the dollar index, down. So let me grab another drink and we'll talk about strategies, etc. See what we think about in terms of has the Grinch stolen the Santa Claus rally, and what kind of strategies can we use going forward in the first trading week in 2023 to make some money and succeed in our trading. So, given all this analysis, and I'd love to see y'all's comments in the chat. What do you think? Do you think the Grinch has stolen our Santa Claus rally? Why or why not? Again, we could talk about it further in our Discord. I will give you my personal opinion. Again, this is not financial advice. This is just my opinion given the data that we're seeing and the other trends that tend to occur at the beginning of a new year. We saw the run up at the end of Friday. We saw, pretty severe tax loss harvesting going into the end of last year. And we know there's a lot of money that's sitting on the sidelines looking for yield, looking for ROI, return on investment, return on money. And that's part of what tends to fuel this Santa Claus rally into the new year is, again, everyone's harvested their tax losses, etc. There's also tends to be a rotation out of the into the underperformers at the beginning of the year. We'll talk about that in terms of the January effect. So it looks like they may try to perform a Santa Claus rally. My recommendation, again, not financial advice, but I recommend you watch carefully and see if and when and where they try to rally. So it may be in technology again, maybe a short-term rally in technology. The old FANG stocks are all beaten down quite a bit last year, etc. Could also be small caps, mid caps. We saw a few small caps start to try to make a run. That tends to be a tendency as well, especially since they're underperformers. So, but again, we'll talk about tomorrow your shopping list and some of the criteria that you should use for any kind of holding any kind of position. But again, if we start to see a rally in a particular sector, take advantage of it. Make your money trading if they start to rally, and we may see it Tuesday, Wednesday. That's the historical tendency. Is the first two trading days of the new year is the end of the Santa Claus rally. If it's a downward trend, then maybe the Grinch has got our Santa Claus rally. So. Also, please be well aware of the terms of the wash sale rule. Make sure if you did do tax loss harvesting that you don't violate the wash sale rule by buying the same stock within that 30-day or 28-day time frame, and therefore invalidate your tax loss harvesting. Again, if you need any additional help with your taxes or additional information about the wash sale rule, etc. We use Mark J. Kohler for our tax questions and our tax accounting issues, and you can refer to him via the link here and also on our homepage under business resources. So again, if you have any questions about, potentially violating, because it's not just the same stock, it's a substantially equivalent stock. So you don't want to lose your tax benefit if you did do tax loss harvesting the end of the year. Again, we talked about our New Year's resolutions, and please share yours in our Discord and in our Facebook group. And I just wanted to throw out a couple additional points that I didn't specifically mention in our previous video. So again, since you've got a 3-day weekend and you might be itching to be trading, some things I would recommend is taking some time to reflect on your trading. How did you do last year? What did you do well? What should you do more of? What can you improve on? Review your trades, honestly and objectively, And again, what did you do well? What should you do more of? What could you improve on, and what should you stop doing? Maybe there's some things you should just, stop doing. It's not working. It's not your personality. It's not a style of trading that works for you. And maybe that's something you should quit doing and do more of what works for you, and how you can be consistently profitable trading. So, again, reflect, identify those things, and then resolve, set your resolutions, and what should you start doing in 2023. Maybe a new trading style. Maybe you should do more due diligence, more research, watch more videos, whatever that is. Set your resolutions and share them with our Beach Bum trading community, and ask for help in helping you achieve those resolutions. One of the things you'll hear in our resolutions, and I recommend, is plan your trades and then nimbly trade your plans, execute your plans. Again, that's something that I want to try to focus on going into 2023. Is maybe even write some of these plans down, given these events. If the employment numbers are higher than expected, what do you want to trade? If it's lower than expected, what do you want to trade? If the oil inventories is high or low, what do you want to take advantage of? Again, think about those events, and what are you going to do if that event occurs, and then execute those plans. Um, Another point I wanted to make, I've compiled our strategies that we've been talking about all through 2022 about how to make money trading a bear market. So I have those compiled into a separate video, and it's currently unlisted. We haven't released it yet. But you can access that, how to make money trading a bear market. Again, with all these strategies we've been talking about all year about how to make money trading a bear market, you can access via this link in the notes. And we'll release that coming up. Also, our strategies, I probably need to snap that out as well, about don't move until you see it. It's part of one of our past weekly trading game plans. And again, maybe I should snip those strategies out as well. So that kind of goes along with the Santa Claus rally. Is if we start to see them rally, we start to see the start of this Santa Claus rally. When you see it, move and take advantage of it, but don't move until you see it. So I hope that all helps. If you all have any questions, I could take a few questions in the chat. If I missed your question previously, I apologize, but please throw it back up in the chat, and I'll try to address those. Also, you can always ask and tag us in our Discord. Please tag us so we're alerted to it and can follow up and try to answer those questions. Also, again, we have a Facebook group. Similarly, if you prefer that environment, we can discuss things in our Facebook group. You can always also contact us via any of our social media sites. You can find links to all our social media sites in the description box below, and also in the link section on our homepage, beachbumtrading.com, bum without the U. And again, all ways that you can get in touch with us, ask us questions, let us know how we can help you succeed in your trading in 2023 and beyond. So Tony Roses says, I must learn to short this coming year. So if that's one of your resolutions, that's great. If we can help in those regards, let us all know. I'm sure there's people in our Beach Bum trading community that can help you along those lines. Also, just an FYI, there are multiple ways that you can short, being shorting individual stocks, buying inverse ETFs that are short on a particular commodity, industry, index, etc. And also, as we'll talk about in more detail tomorrow, we've started to sell cash secured puts. So you can also do puts options. So there's many ways, again, to make money in a downtrending bear market, essentially shorting whatever it is that you're trying to short. And yes, Alan, I agree. And we've been talking about this for quite a while, is growth stocks, unprofitable growth stocks, which tend to be tech, biotech, etc., are not conducive. The rising interest rate environment, high inflationary environment, we've been talking about that for quite a while. Is goodbye Tina. There is no alternative. Welcome Tara. There are reasonable, real alternatives now. So. Well, again, thank you all for joining us. Tomorrow we will take all of this data, all of these strategies, and we will select our individual stocks, ETFs, etc., to put on our watch list, put in our bullpen for trading, potentially trading for the first trading week of 2023 from January 2nd through January 6th. So we hope you will all return. Yes, I know it's a New Year's Day. Understand. I hope you're enjoying your happy New Year's holiday weekend. But we will be back tomorrow at same bat time, same bat channel, 10 a.m. Eastern. And again, we'll do part 2 of our weekly trading game plan and select our individual stocks. So thank you all again for watching. Good luck. Have a very happy New Year's. New Year's Eve day and New Year's tomorrow. And hopefully I'll see you tomorrow. And if not, we'll see you in 2023. Thank you again and have a great rest of your New Year's Eve day. Bye.